Hello and welcome back to our weekly Market Insights series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. Let's get to the news. All right, equities are rebounding after suffering heavy losses earlier in the week, triggered by a tech sell-off following reports of a cheaper AI model from China. Meanwhile, treasuries recovered from last week's losses, with the 10-year treasury yield stabilizing at previous levels. With its first policy decision of the year, the Federal Open Market Committee voted unanimously on Wednesday to keep federal funds rate in a range of 4.25 to 4.5%. The much expected decision ended a run of 3 consecutive rate cuts since September. In a post-meeting statement, officials repeated that inflation remains somewhat elevated, but dropped any reference to making progress on their goal of reaching 2% inflation. They also noted the unemployment rate has stabilized at a low level. Fed Chair Powell's press conference provided little additional detail beyond what was described in the policy statement, but he did add that the committee is in no hurry to adjust its policy stance. The U.S. economy expanded at a solid but slower pace at the end of last year. The Commerce Department indicated that inflation-adjusted gross domestic product accelerated at a 2.3% annualized pace in the fourth quarter, after rising 3.1% in the previous quarter. Economists have been expecting an increase of 2.6%. The growth was fueled by consumer spending, which advanced at a 4.2% pace versus 3.7% in the third quarter. For the full year, GDP accelerated 2.8% compared to 2.9% in 2023. Thursday's release was the first 3 estimates the Department's Bureau of Economic Analysis will provide. The U.S. international trade deficit hit record highs in 2024, totaling $1.2 trillion, slightly above the prior record set in 2022. In December, the deficit ballooned by $19 billion, reaching $122 billion and blowing past expectations. Imports of goods rose by 3.9% in December to $289 billion, in a sign some companies sought to bring in goods ahead of the anticipated reintroduction of tariffs. Exports fell by 4.5% to $168 billion. U.S. consumer confidence suddenly dropped in January to a 4-month low on less optimism about the labor market and the outlook for broader economy. The Conference Board Consumer Confidence Index declined by 5.4 points in January to 104. That is worse than the economist's projections of 106. December's reading was revised up by 4.8 points to 109, but was still down 3.3 points from November. The Commerce Department reported on Monday that sales of new homes in the U.S. finished last year on a positive note. The pace of new home sales increased by 3.6% to 698,000 during the month, beating economists' forecast of a 675,000 increase. For the full year, an estimated 683,000 new homes were sold, up to 2.5% from 2023. Meanwhile, December building permits were revised down to 1.482 million from 1.483 million, a 0.1% fall from November's figures. According to the FHFA, U.S. house prices rose 0.3% in November from October, slightly softer than the 0.4% expected increase. Over a 12-month period, house prices were up 4.2%. The previously reported 0.4% price growth in October was revised upward to a 0.5%. The National Association of Realtors said that pending home sales in the U.S. retracted by 5.5% in December, snapping a 4-month winning streak. Compared to 1 month ago, pending sales declined in all 4 U.S. regions, with the West recording the largest drop. Despite the average 30-year fixed mortgage rate remaining unchanged at 7% from the previous week, MBA mortgage applications fell by 2% during the holiday-shortened week ending January 24th. This follows a 0.1% increase in overall activity in the week ending January 17th. Purchase contracts declined by 0.4% from the previous week and were 7% lower on an annual basis. The refinance index fell by 7% week to week, but was 5% higher than the same week in 2024. The number of Americans filing new applications for unemployment benefits fell more than expected last week. Initial jobless claims declined by 16,000 to 207,000 during the week ending January 25th, below the 225,000 forecast. Continuing claims declined by 42,000 to 1.8 million during the period ending January 18th. In international news, the Bank of Canada on Wednesday cut its benchmark interest rate by 25 basis points, bringing the policy rate down to 3%. The move was widely expected and marked the 6th consecutive reduction. On Thursday, the European Central Bank announced that it had also reduced the deposit rate by 25 basis points, bringing down its key rate to 2.75%. It was the 5th time since June that the central bank reduced rates as the region's economy is stalling and the 2% inflation target is within reach. That's all, folks. As always, stay locked in so you are current on market news. Also, if you like this video, please hit that like button, share, and subscribe. My help is always to keep you in the know of the latest world news and, of course, our pricing incentives. Have a great weekend, everybody. Buffy, out.